So I'm going to ask with a question as well. Hopefully more hands up. Um, can you show hands if you have used or your company has used AI in the last 6 months of some shape and form? Yep, absolutely. So I guess the speed of technological advances is rapidly accelerating now to a degree that most of our industries are affected by it. And I guess as investors, we can ask, how does it affect us? How can we, start using these technologies? But the bigger question in my mind, particularly for today's panel, is how are we going to invest our money to take advantage of the opportunities? So let's see whether we can explore that. So we've got a great panel today. We've got Martin Stein, whom I've just met about 30 seconds ago. And he comes from Alltech Batteries. We've got Yash Varma from Empress Capital. And we've got Ravi Nahathan from Robotics. So very different companies, very different access into the disruption of what we're experiencing on a daily basis. So before we start, I want to ask each of our panelists to perhaps give a bit of introduction on themselves and how they ended up in the company that they are, because relatively new experience for all of them. So maybe, Ravi, we can start with you.
Thank you. So Ravi Nahapan, I'm in the food and kitchen robotics space. So I think, again, it's an application of technology, right, into a traditional industry. A banker, financier, engineer by training, and now in the robotics space. Yeah.
So before you hand over, tell us about Robotics.
Sure. So Robotics is really reimagining the way that restaurants or the food service industry operates. It's as I said, a very manually intensive traditional industry with highly repeatable tasks, with high consumer preferences, right? So what we're trying to do is essentially use hardware and software to make the business better, more efficient, change the operating model, which I think investors should be excited about.
So in terms of your product itself, is it a unit? What is the product? Is it a retail product? Are you producing this for the retail, for the restaurant industry or the retail market?
So very much, our customer profile is very much more larger QSRs, larger enterprise customers who ultimately see this as an operating model going forward, where I'd mentioned and alluded to it earlier today, where the younger generation, the Gen Z, don't wish to spend their Friday nights in front of a frying basket or cooking food. So I think time is the asset that we all crave, isn't it? To spend time with our families and doing the things that we enjoy. So I think this is where, again, the solutions that we're building, whether it's kitchen in a box or automated solutions in a restaurant environment, is giving back convenience and time to us as humans, right?
Thanks. Yash, tell us a little bit about your background and how did you end up at Empress Capital?
Yeah, thank you. So look, Yash Varma here. I'm a founder and general partner at Empress Capital. We're an early stage, we invest in early stage AI companies. And just firstly, Ravi and I aren't related. We just share the same hairdresser. And I would like to say, Ravi and I were talking earlier on, and he, one thing he talked about was that actually you didn't say, which was robotics as a service, was something that you mentioned to me. And so, we see this whole environment right now, not just AI, but we look at robotics and AI and the fact that there's new business models that are coming out. And so look, our focus is investing in those early stage companies. We look at AI in terms of three buckets: AI-based applications, tools that are being used to develop solutions in that space, and infrastructure. And look, my background is having had a software business for 20 years based in London and Scotland, global clients all over the world, exited that business. And so for me, it feels a little bit like my first business was early days of the internet. We're back at a stage where there's a technology that's going to change almost every industry. So we think, for us particularly, we think early stage is where some really great investment opportunities are at.
Thanks, Yash. Martin, you are in a very interesting industry because with all these new technologies, one of the biggest problems is, of course, energy. Not just energy production and energy supply, but also energy storage. So tell us about Alltech batteries a little bit and what you do in that area.
Thanks for the introduction. Yeah, you are correct. I mean, the energy storage and companies and countries securing their energy is going to be critical with the renewable energy transition. Also, with the artificial intelligence transition, the leaders in that field, like Mark Zuckerberg from Meta and Elon Musk from Tesla, have come out and said that the bottlenecks for AI is not going to be computing power, it's going to be energy. So, securing energy is, I mean, it's always been a critical aspect for global economies. There's been wars fought over it. There's been a lot of struggle to get energy supply. And I think with renewable energy transition, I think it's going to be even more important in countries securing their energy and their energy storage. Now, what Alltech Batteries does is it's commercializing a battery that can solve this grid storage battery problem. They're sea container sized batteries. They're 1 megawatt hour, so they're very large batteries, but we'll commercialize these and they provide an option for putting onto renewable energy grids, which is dominated at the moment by lithium ion technology and Tesla's Megapack. But we have a different technology that is completely different, and we're commercializing that in Germany. Our company is on the ASX. We're listed under the code ATC.
Thanks, Martin. And just to give you a bit of an idea of the energy and demand, currently about 2% of the global energy supply goes into data centers. It's estimated that by 2030, this will be 8% of the global energy supply. It's absolutely staggering. And what is required, there's a number of things that is required. Obviously, there's a transition to renewable energy, but also better storage, better transfer of energy so that we don't actually lose transporting energy, and also a comprehensive solution, I guess. And of course, Martin, Alltech Battery is part of that solution in terms of how energy is stored. I want to return to your technology though, because it's a little bit different. You mentioned lithium ion batteries. What is the advantage of your technology compared to those?
All right, so obviously lithium-ion batteries use a lot of raw materials, lithium being one, copper, cobalt, graphite, and manganese are also critical minerals that industry uses. They're sourced from China, from the Democratic Republic of Congo, and they have price fluctuations and there's ethical issues in the supply of those materials. Lithium-ion batteries also are limited in their life, just like any other device that you've got with a lithium battery, like your phone. It degrades very quickly and they have limited lives. Lithium-ion batteries are also limited in their temperature range that they can operate in. So outside of 15 degrees to 35 degrees, the lithium becomes viscous and they experience difficulties in charging and discharging, which reduces the capacity. So what Alltech is doing, and this technology was developed by the German Government Research and Development Institute called Fraunhofer. They're our joint venture partners in the project. They've developed this technology over the last 8 years and now we are just commercializing it. But this technology uses sodium chloride, which is common table salt. That is the main ingredient. The sodium, I won't go into the chemistry in too much detail, but the sodium basically turns to a metal and charges and discharges the battery when the battery's heated to 270 degrees. So we don't use any lithium, copper, cobalt, graphite, or manganese. We also can operate in wide temperature ranges from minus 40 to 60 degrees, so we don't have the viscosity issues of the lithium. And we have a long life. Sodium doesn't degrade like lithium does, so we can go for 15 years.
And how is the joint venture going with the German government?
Very good. Look, we can't speak highly enough about Fraunhofer as the joint venture partner. I mean, being German government owned, their credibility and their reputation is everything. they would not have brought this product to market if they were not completely comfortable in their technology. They've spent the 8 years developing it. They've tested it. It's all working. This isn't an R&D project anymore. It's a commercialization. So to have Fraunhofer on board, they're still heavily involved with the commercialization of the product. To have their scientists, their battery experts, their engineers as part of our team to commercialize this is priceless, really.
And how broadly can you roll this out in a grid globally?
We don't like to look too far ahead, but we think there is a global potential here for this product, but we have to tick off a few things to get there. Now, we're commercializing this technology in the form of a 120 megawatt hour plant in Germany. That's the first stage to commercialize the product, but the joint venture has the worldwide rights to license, manufacture, and distribute the product. We know the demand for grid storage batteries is growing at 28% compound annual growth rate, so it really is a big part of the renewable energy transition and meeting the net zero targets. So we have goals down the track, but the first is to get the funding to construct a 120 megawatt hour plant in Germany, and then we'll turn to gigawatts.
Thanks, Martin. Ravi, I wanted to ask you, because your product actually incorporates AI and robotics. What were the biggest challenging? Obviously, there's so much of that is coming now in the market, so many different technologies that are available to solve problems. What were the biggest issues when you were developing your product?
So I think for us, Maria, we really went back to first principles, right? I think there's a lot of technology out there, but there is always the risk of overcomplicating things. I think this is, again, something you've got to be quite disciplined about in terms of the approach. So we see, again, AI is really about understanding our consumer, our customers better, right? How do you understand preferences? Yash and I were talking about, with someone else as well, about swim lanes where, there's a lot of convergence now between med tech and food tech, and where, we're going to reach a point of wearables where we understand, is coconut oil good for everybody, or avocado? How does it impact me as an individual, right? So really understanding using it. And I think that compute power, AI, will really drive a lot of that, right? So for us, the selection has always been what is relevant, what is cost effective, because deployment for us is number one, and what is the customer ultimately willing to pay for as a product, right? So making sure we're focused on bill of materials and responsible sourcing and things like that. So yeah, robotics wise, for us there's a lot of technology. Just make sure what's relevant for where you are on that journey, I think, and then that over time it gets better, it upgrades. I think we go back to the first iPhone or the first Apple Pod or whatever it was, right? There's been a distinct evolution. So.
And what is your business model? Are you selling the actual product, or you're licensing?
So we're moving down a robotics as a service model, ultimately to reduce friction with our customer base. So we're able to essentially get going, with $3,000 a month, and you've now got a fully fledged restaurant up and running, right? Without the capex, without the sunk costs, supply chain in place, monitoring in place, etc. So again, I think this is a reference to new models being developed and operating models that will enable growth and further investment in the technology, whatever it might be.
Yes, you're hearing all these technologies, and I'm at UNSW. I've been there now for 3 weeks, so for a long time. But we've got the most amazing spin-out companies in quantum computing and AI. I don't know whether you know SQC or Direct, but these are some of the leading companies. And the reason why I mention is, first, I wanted to give a plug to my companies, but then I also wanted to ask Yash, what is he investing in? And what are the things that he's not investing in currently, particularly with what, in 5 years' time, who are going to be the companies that they'll still be around, and who are the companies that won't be around anymore?
Yeah, thank you. Look, there's a whole lot of, the challenge for investors right now is every company is an AI company. There's a lot of AI washing. We're now moving to agent washing. I think I mentioned this a few weeks ago. And so it is really difficult to work out where do I invest. And so I'll give you some examples of where we're investing. We've invested in a company called Buzzy, which is a no-code platform. So we think the way software development is going to work is going to be very different. And so this is a platform that people with no programming skills can develop a working Android and iOS app just straight from talking to the application. It also allows designers to use tools like Figma and generate applications straight off the back of that. And so we look at this as a really designers are being disrupted right now. If we look at what you can do with generative AI, and so they need to find different models to provide value as well. And we see tools like Buzzy, for example, giving them future business models to go up the value chain as well. And so while we often hear everyone's going to lose their jobs, my key thing here is we all need to adapt in every part of our life and work, and it's so integrated. We've heard quite a few people here today, ranging from their business to their to our emotions. I know Nick was just talking about that, and so another company we've invested in is in the PropTech space, a company called Akistar, being able to design buildings using AI within planning permission. And if you look at what are some of the friction points we're talking about, it's getting those DA approvals. And so if you can use AI to make that a quicker and less friction process, it allows a new business model. Once again, they're working white labeling this with governments around Australia and in the US now.
I find it quite amazing that 5 years ago everybody was told that learn Python or tell your kids to learn Python and they'll be fine. And now we're being told don't let your kids programming because we're not going to need them. And GitHub Copilot auto-completes 40% of all code now on supported languages. So what's your view on that?
Yeah, look, I don't think it's going to go away. I still think we'll have more software. But it will mean that people can develop more. So we're going to have a proliferation, I believe, of software solutions. In our team, we've talked often about the concept of disposable software. So if the cost goes to zero to make something or very close to that, people will start to generate more and more ideas through this. And what's interesting is that people who don't maybe have the technical skills now have that open to them. And so if we think about that from running a business or creating a business, it's opening up. And that's one of the big shifts that's happened, particularly with generative AI and the large language models. We're seeing a whole bunch of new founders, and not just typically the young kids out of uni or even earlier. We're seeing people who see the disruption, who are leaving their businesses at 40, 50 years old and going, hey, I can see a problem that used to take me a long time to solve. Another example, I guess, is as well, we've just invested in a legal AI company that does a specific niche. And so when you say, where do we want to invest? We don't want to invest where any of the big players are playing. So we want to avoid, a lot of where someone like Google or OpenAI are playing. But we look for real niches. So real sort of vertical AI is what we like to call it. And there's a lot of data around this that companies that can be successful in that are 400% more profitable. And so if we look at it investing early, we think being able to invest earlier in those companies will require less capital. And when we're talking about software, sure, when there's a hardware component, it might be different. But
And of course, you're an early stage VC, so your expectations for return are not 10x, but 100 or 1,000x. So you're not going to get that on OpenAI anymore, obviously. So you have to look for other opportunities.
No, 100%. So we think this is where, if we can get it right, and the venture model is, we just need one of two of our companies to really hit it out of the park, and we feel that's where we see the opportunity. Having said that, we are very conscious of liquidity in our fund, and so we generally invest in Australia. Our one non-Australian investment has been in Anthropic, and so we feel we've taken some opportunities where we can see them, and we think if we try and predict what's going to happen in the future, we don't see there being lots of organisations that are going to have that sort of funding to be able to do that. But we do think if you look at what's happening there. The key team that was being at OpenAI, the majority of them are right there now. We're starting to see regulation. We're starting to think about, what's safety involved in these models, and that's going to become a big part of a lot of the solutions that are going to come out.
Absolutely, and of course, the Anthropic model is a philanthropic model, so that will be interesting how they're going to generate return. But no doubt they will. I don't have any doubt. Ravi, you're in an area where you also in your past seen a lot of technologies. I also want to hear your view on how do you see what's going to survive in 5 years' time. How many AI companies are we going to have?
Ooh, it's. I wish I had my crystal ball, but no, that's. Again, I think it goes back to this swim lanes theory, right? Where Facebook's now used to be, let's say, consumer ads, that sort of workflow. Apple was consumer, hardware, we're in your pocket. And then, OpenAI is doing its own thing. So, firstly, you're going to need a lot of capital to play in that language model space, right? And I think the reality is it's in the US and it's big money and it's almost like an arms war going on, right? Who's got deeper pockets? But I think really who's going to survive out of this? Is it Google? Is it because when I speak to my younger cousins today, they don't Google anymore. They chat GPT. So that generational shift is something worth watching, right? So because you now get context, you get some. Obviously, we're not at AGI levels yet, but at least at ANI level, we can see some element of clarity. So I think the way that we work will change. The thing about technology, you put it out, it's redundant tomorrow, right? You got to continuously evolve at it, right? So,
in fact, I did my notes yesterday, and I think they're completely redundant today. That's why I didn't go through it for you. I think one of the things that we all want to understand is what are the things that we should be doing so that we remain competitive, both as individuals but also investors. So what are the things we should be looking at? I mean, and I'm asking all of you, and you've got maybe AI robotics, you've got more of an investment venture and perhaps an energy angle. So if you could answer this question, all of you, one by one.
Sure. So I think again, technology is the enabler for us to do things better, faster, more efficient, etc. But I still believe that business is actually done with relationships. So going back to the human part of things, so distribution, sales, payments, all these kind of things which are still human based in terms of. So I think those moats will exist eventually. Now, how that distribution happens, again, it may be technology led, but yeah, I think from our perspective, you've got to be applying a technology lens or an AI lens to every part of the business, right?
As they say, AI won't replace doctors, but doctors who use AI will replace doctors that won't.
Yeah, and I think that's every industry. Look, I would say the most important thing for me, and when we look at founders and we look at ourselves, is just having a growth mindset and continually learning. And I think this is, to me, one of the things is not falling in love with that technology. And this is the challenge for all of us, is to see a particular technology and think that's what's going to solve it. This is evolving so quickly. And as you sort of said, we always, we talk about this, every week. Every week feels like a month. Every month feels like a year. And it's not just, and we combine all of these technology, combine battery technology with AI, we combine robotics. We'll probably have something that combines all three of these things quite easily and come up with some really interesting solutions. So I think continually learning is one of the biggest things.
Thanks, Ash. And where is the energy market going? Where are we going to get our electricity?
Well, I'll answer that question, but I think you had a very good point, because AI is already being incorporated into battery technologies. Altec is doing a digital twin, which is a digital replica of the physical battery that can fit onto a customer's digital grid, and they can do real-world analysis and testing of that already. And of course, the battery management systems are incorporating artificial intelligence as well. So it's already there. But to answer your question, I think if we're talking energy, I think the key consideration has to be ESG. Environmental, social, and governance. It has to be green considerations. I think if the world is going to meet its net zero targets that it's put in place, the green energy shift is going to provide the solutions to that. And as part of that, batteries. You have to have. You cannot have a green energy transition reliant on solar and wind that is intermittent in its production. It doesn't produce it at night time for solar. You need to stabilize the grid. You need to have batteries that can be incorporated with the renewable energy production to stabilize the grids 24/7.
I would like to thank our panel, Ravi, Yash, and Martin. And unsurprisingly, we haven't solved the world's problems in the last 30 minutes, but thank you so much for your attention.